Good afternoon, everybody. It's Chris Robinson, Robinson Ag Marketing for Friday, the 26th day of June. Happy Friday. We're going to wrap it up here as quick as we can. Daily changes. July spot corn down 2 cents, 4.12 3/4. Traded as high as 4.17 for the week. Spot corn dropped 4 3/4 cents. New crop corn, right? That's everybody's watching. We traded as high as 4.46 1/4. Looked like they were going to get after it. Then we were a little bit lower. Finished the day down at 4.41 1/2. After a good key reversal yesterday on the charts, we did finish down 1.5 pennies on the day, and also down 2.5 for the week. If you look at the big mover today, July wheat down 12 3/4 cents, 12 1/4 cents. Seriously, at 5.78 1/4, 12 3/4 cents. Just disappointing, and we'll see what happens. It just felt like for a Friday, it was like a Friday fizzle when wheat started out. Look, I think a lot of people thought we'd get more short covering. KC down 9.5 on the day. It's finished down at 6.11. For the week, however, for July, we finished down 27.5 cents. So a bad weekly performance for Chicago's soft red wheat. On the flip side, beans. Beans have been the stalwart performer. Anything above 11.61 this year, if you're able to sell beans, you're in the upper 30% of available prices. We started out the year at 10.55. We had a high of 12.14. Anything here around 10.61 is, in the goal area of 99% of marketing advisors out there. That's what guys try and do. It's very hard to get in the top 5% or to sell the highs. But if you can get in the upper 30, that's a goal, because statistics show that when you break it all down and when you dig into what people actually do, something like 3/4 of all the grain in this country gets sold in the bottom third of available prices. People tend to make cash sales into the ditch emotionally. So we try to not do that. That's really what good marketing is all about. I mean, heck, if you could sell at the average of the year, you beat a lot of marketers out there, like I said. And so that's what we try and do. We try and make good cash sales here. We try and use options, both puts and calls, to keep you in position. The puts are there if you can't make the cash sale. The calls are there to help you make the cash sale. Or in a situation like we just had, a 90-cent break in soybeans and then a 75-cent in corn, if you did manage to make cash sales higher, that's when you want to be re-owning those bushels with call options. Not because you have a psychic friend network that told you that, corn's going to rally back all the way to the highs. Not because somebody knows that beans are going to go back to 12.50. But it's, risk management. You have two piles of risk. You've got your unpriced grain and your priced grain. It's always up to you what you want to do as far as managing your risk. Now, why do I say all this? Because Tuesday is going to be probably the biggest report we've had since January. For the USDA. January punched everybody in the face. Remember that, how mad people were. Then we had a good recovery. Hopefully the guys, took advantage of that. Now we didn't, just in the last month, we've had the pretty much watched corn especially fall out of bed. Beans not so bad, but corn absolutely positively. So are we overdone? Yeah. Does that mean that we can't go lower? No. That's why we would keep our puts on here, but have them be as cheap as possible. But I will say this, the action in beans is positive, right? 11.56 1/4, up 13.5 on the week for new crop beans. So there's your positive. If you're looking for something positive in a negative day, and Novi beans today only finished down 0.75%. So hopefully soybeans can be Charles Atlas and lift the entire grain complex up. We're going to find out on Tuesday, guys. Switching over to the protein complex. Fat cattle, feeder cattle, lower on the day. August fat cattle could not take out 250 all week, and had a really kind of a terrible $2 trading range today. Just sleepy trade, down $1.40 on the day. For the week, August fats finished down 80 cents. August feeders, however, for the week finished up 321. That's in spite of the fact that we finished down 345 today at 369.85. So every time we poke our nose above 375, we stall. If we could ever settle above 375, 377, then we'd be talking about, of course, 380 opening the door to $4. We did get a positive, a friendly cattle on feed last week, and the market did not seem to care. Finishing up with the lean hogs, July hogs finished up 22 cents, finished up just under 93 cents, 92.5. That was interesting as well. The hog and pig report was kind of friendly. All the numbers were lower than expected. And you did see some good recovery in the deferred months. If you go Dec, Feb, April, May, all of next year, they all had good recoveries. So, but when you get closer to the nearby, including August, still languishing here. So, while it might be tempting to lift all your puts and say the lows are in, I would keep something cheap under there just in case we get some surprise move here. So, but again, you don't want to have a lot tied up in puts at this point in hogs across the board. I wouldn't have more than 25 cents to a dollar, maybe a max $1.50 tied up into a put here. And in the outside markets, we'll wrap it up with that. Crude oil went down today in August, traded 68.56. Got to within a buck of filling that gap going back to February 27th when the war started. Yeah, there's all kind of stuff every time you turn around, somebody saying something, doing something, but the market definitely has, I think, been exhausted. It's out of fear mode and obviously trading what's more important, which is supply and demand. And the demand is interesting. There's some good stories out there I read this week. I'm going to write about it in my weekly wrap about possibly, what's been going on with China. Did China stockpile a ton of crude oil and forget to tell everybody at CNN that they did that? Because they have not been really in the market. Just like they really have not been in the market for corn or soybeans, even though you would have thought they might have been in there. So as we move forward next week, I can't stress this enough. The USDA on Tuesday is going to be a big one. People are expecting neutral to bearish information. However, if we do get a big shift in acres in corn, that would be the shocker. If we came out and we misplaced somehow a couple million acres or more of corn, and that went to beans, that would be something that we could really rock the boat. So on that note, guys, have a great week. RobinsonAgMarketing.com. I will be posting my weekly wrap tomorrow. I will be posting my 15-minute webinar while I'm going to go through each one of these charts and talk about it. If you want to learn about technical analysis, if you want to learn about retracements and the things that I learned in the last 30 years, starting out as a 20-year floor trader, and then for the last 15 years working with farmers and producers. If that's something you want to learn more about, take a look at my website, take a look at my letter and the webinar. Like I said, I'll be posting it probably tomorrow or after lunch. All right, guys, have a great weekend. Take care. Thank you.